Hey YouTube, welcome back to my financial focus. In this video, I want to talk about Arista stock and a potential opportunity coming up with Arista stock, which is a 4-for-1 stock split. As we can see today, Arista stock is up 1%. In the last month, it's up 40%. And this right here is when they announced their 4-for-1 stock split, as well as a $1 billion buyback that their company is going to be doing for their shares. It's up about 100% in the last year, and it's up about 500% in the last 5 years. As we can see right here from this article on Forbes, up 75%, 3 reasons Arista Network stock will keep soaring. If I scroll down here, they go into depth a little bit, like just 3 short reasons about why they think that Arista stock is going to continue soaring after the 4-for-1 stock split as well as after the buyback. And after going through this article, I'm just going to go through their financial statements so we could get a better understanding of the financial health of their business. And then I'm also going to be doing a discounted cash flows analysis using Microsoft Excel to figure out what the intrinsic value of Arista's stock is so that we can know what a good buying price would be for us from a value investing perspective. So as we can see right here, they're talking about how Arista's stock has grown on average about 29% since their 2015 IPO. And if I scroll down a little bit here, we can see Arista stock popped 25.6% in early November 2nd trading, posting 24% revenue growth up to $749 million, which was $11 million ahead of analysts' forecasts. Their earnings per share came out to be $2.96 per share, up 22% from last year and up higher than 23 cents against analysts' estimates. Right here, this is really interesting. I thought this could be a good potential opportunity for Arista to grow their stock a lot in the future, which is, it says right here, for fiscal year 2022, Arista raised their forecasted revenue growth to 30% because Facebook's Metaverse is going to be using Arista's switches to build their Metaverse through their increase in CapEx expenditures of up to 60% in 2022. So I think that definitely poses a pretty unique opportunity for Arista to get in at the ground level as Facebook is trying to build up their Metaverse. And if I scroll down a little bit more here, we can see how they talk about how the CEO, Jayshree Ullal, she has a very great understanding of working in different tech companies like this. She's been working in tech companies like this for the last 30 years, so she definitely has an advantage over a lot of other CEOs in tech startup companies like this who may not have as much operating history as she does. And if I scroll down right here, we can see the article lastly points out how the company noted in their latest shareholder meeting that they are going to be having a 4-for-1 stock split that is going to be trading on the public market as of November 18th. And Arista will also be buying back $1 billion more of its stock, thus reducing the denominator in its earnings per share calculation. So for people who are holding on to shares before they do their $1 billion stock buyback, those people's shares are going to be worth a lot more after Arista buys back their shares. As we can see right here from Arista's balance sheet, this is their financial health. And it's good to understand the financial health of a business if we're going to be investing in it for the long term. We can see that their current assets in 2022 are up from, where is it? Right here, total current assets is up from $3.4 billion to $3.8 billion. And then their total assets are up from $4.1 to $4.7 billion. And then lastly, their total stockholders' equity is up from $2.8 billion to $3.3 billion. Right here in their income statement, we can see that unfortunately for 2020, their total revenues declined, and that was probably as a result of everything that was happening and all the events that occurred in 2020. We can see that a majority of their revenues come from the products that they sell, and then the minority of their revenues come from the services that they sell. This is the cost of their product revenue and their service revenue, which is substantially lower from the actual revenue that they bring in from selling these products and services. And their gross profit is pretty substantial. It's more than 50% of their total revenue. And it's a great sign to see that a business has high gross profits. It definitely positions them better in the market. They have higher pricing power than their competitors, so they're able to gain an advantage from that standpoint. And then right here, we can see that the net income for Arista in 2020 came out to be about $630 million, which is down from $850 million in 2019. And then lastly, I'm going to be looking at their cash flow statement, which we can see right here. The cash that they produced from their operating activities in 2020 came out to be about $735 million, down from $963 million in 2019, which was up from $503 million in 2018. They invested a substantial amount in 2020, probably taking advantage of the decline in share prices in the market. We can see right here, purchases of marketable securities was their largest purchase of, or their largest use of investing activities, which came out to be $2.6 billion. So that's quite a bit. And then they've been repurchasing stock steadily in 2019 and 2020. In 2020, it came out to be about $395 million of repurchased stock. And as I said, or as we observed from this article, they're going to be buying back even more stock in 2021. So that's definitely a good sign for people who are holding on to Arista's stock. And the last thing that I'm going to be doing is doing a discounted cash flows analysis using some of the financial metrics from Arista's financial statements to try to figure out the intrinsic value of their business. The growth rate for years 1 through 5, I'm just going to get from Yahoo Finance by going to their analysis tab, and we can see right here growth rate for years 1 through 5 is about 18.14%. And then for growth rate years 6 through 10, I'm just going to be conservative and slash the initial growth rate in half at 9%. And we can play around with that value to figure out what the intrinsic value would be based on different growth rate estimates. For year 1 free cash flow, I'm just going to get that from TradingView by going to Arista Networks, selecting the cash flow tab, and then seeing that it was $719.73 million. And all of these values are in billions, so that's why this comes out to a decimal, because it's 719 million. And net cash minus net debt at the moment for Arista's balance sheet comes out to be about total cash right now 3.39 billion, total debt 61.63 million. So that's a great cash to debt ratio. That comes out to be about $2.77 billion. Stock ticker is Arista Networks, a net, and then shares outstanding comes out to be $76.82 million. So after plugging in all of those values, we can see the free cash flow in billions. So it would be 720 million in year 1, and then what we would basically estimate selling the business for in year 10 based on this model would come out to be about $21 billion, and that value discounted back at our 10% discount rate per year comes out to be $8.3 billion. And so the present value of Arista at the moment in terms of their free cash flow, which would be this value right here plus plus all these values combined, that comes out to be 16.35 billion, and then we just add that value of the 2.77 billion that's currently on their balance sheet, which brings it to 19 billion, and then we see intrinsic value per share of about $248.88 per share, with a 30% margin of safety of $174 and a 50% margin of safety of $124. And that, compared to the current share price, definitely seems that Arista is, according to the discounted cash flows model, overvalued at the moment. However, like I've said in previous videos, the the discounted cash flows model, it's not a fully perfect model, so it's just a reference tool that we can use to figure out what the intrinsic value of a company would be, but it is definitely something that we could take into consideration. However, I'd love to know what you guys think about Arista stock, if you guys are going to be buying into it in order to take advantage of the future stock buybacks and the stock split that's coming up. That's probably going to propel the share price a little bit higher, as well as everything that was mentioned in this article. I'd love to know what you guys think. Let me know in the comment section below, and also leave a like on this video if it provided any value to you guys. Subscribe to the channel if y'all haven't already, and I'll see everyone in the next one.